Hi there everybody, welcome back to my channel. My name is Rachel and I'm a real estate agent and advisor with RE/MAX 360 Realty here in Pittsburgh, PA. So I have 4 pieces of pertinent information when it comes to the current state of the housing market in Pittsburgh. I did my research on my local MLS. I'm not going to be able to show any infographics because I'm not sure I'm allowed to use them on YouTube as they are copyrighted and all rights are reserved to the multi-list I am a part of, but I've drawn some statistics from this information that I believe can be shared publicly. So I'm just gonna give it a go with the information that I have gleaned. Again, I will reiterate, I am not a statistician, so this is just sort of what I'm seeing based on the graphs that I pulled up and all the numbers that I ran, but I'm pretty sure based on what I'm seeing with daily listings and daily solds and daily under contract, daily contingent, daily back on market, pretty sure that what I'm about to tell you right now is quite accurate. So the first piece of information I want to give you today is historic sales are down. So they're actually down 60% from where they were last year in October. So in October of 2021, the sales volume was 60% higher than it is in October so far. Now, of course, we still have the rest of the month to go, but it's not looking great. So we're gonna be on track to be about 60 to 55% down, and we're actually half down from 2019. So October of 2019, the home sales were about 50% more than they are now. I don't want to say this is unprecedented because I believe it was a similar situation in 2008. However, it does not bode well for our market. And you can imagine why. In 2021, the interest rates were extremely low and everybody was still sort of scrambling to buy a house in this time frame. Skip over to October 2022. Interest rates are extremely high compared to what they were before. Of course, a lot of people are going to exit the market. They're gonna put their search on hold. They're going to back out of deals if they find that their budget is just getting too out of control. It makes sense. People are not itching to buy a house right now if they have the ability to wait. Now, of course, there are always going to be people that have to buy and sell. So you're seeing those people buying and selling right now because they have to. But the amount that we're down in historic sales is concerning. 60%, that's a huge number. And this is indicative of what the feds were trying to do all along. They were trying to slow down market prices from soaring way above where they logically need to be. So they've also compressed inflation in the way of the housing market where the interest rates are squeezing the consumer. So we're sort of getting back to a realistic median in sales price. And the unrealistic expectations of somebody that wants to sell at a 2021 price premium, yeah, it's not going to happen at this time, and those days are actually probably over for now. So the next statistic that I want to bring up is that the sales volume of houses is about half of what it was this time last year. Half. And to add to that, volume of home sales is down 35% from June. And again, we can all guess why. The interest rates have catapulted into the 7s since June. And I think back in June they were in the 4s still. That is a huge difference in interest rate. As you all know, what you could afford at a 3% rate is not what you can afford at a 7% rate. So a lot of people are being pushed out of price ranges and pushed out of owning their potential dream home, which is causing people to wait. And this waiting period is slowly dwindling demand. And supply is pretty much just as high as it was a year ago, which means yes, sellers are still very eager to sell and they're hoping to get what they would have gotten in 2021. But as I'll reiterate, the demand simply isn't there, so they're not going to get 2021 prices for their homes. Now, one thing I will say is that the median sales price is actually consistent throughout this year. So that means that when a house is selling, it's still selling around the same price, but it's about, I would say, a 5 to 10% decrease in what it was last year, which is a little bit, but it's not really a ton of money like they were predicting, the 30% price decreases nationally. Are we on track to get to 30%? I don't think so. And here's why. Another factor that we're looking at is the list price to sales price ratio. And this ratio is down 1% from what it was last year. So that means that instead of homes selling for 100% or 99% of list price like they did throughout 2021, they are actually starting to sell for around 98% of list price, which you may think, oh, it's not that much money, but it is a couple $1,000s out of a seller's pocket, maybe more. It is on track to be a lot lower coming up here. So that's gonna be, I would say, probably around 96% at the end of the year, which truly, that's not great. It's really not great. But again, it's not the worst statistic that exists in the USA. I do think it's gonna even out, and we're gonna have a median sales price that is going to be pretty consistent throughout 2023. But again, it's gonna be like a 5 to 10% decrease max. I really don't believe we're gonna be seeing crazy, insane decreases, simply because sellers are going to realize that the demand is down and they're just not gonna sell. So what does this mean for the real estate market in general? Median list price has not gone down in the last couple months. In fact, it's as high as it was in, I think, June. So what that means is sellers are still clinging on desperately, hoping that they're going to sell at October 2021 prices. My guess is that in the next couple months that is going to go down to realistic listing median prices, and sellers are gonna catch the drift that it's not the same market as it was, and things are really having a rubber band effect back to some semblance of normalcy when it comes to supply and demand. Obviously, we're gonna be down next year in a big way in demand, but again, this is all part of the Fed's plans to, really even out the market and reduce the impact of inflation. And one more piece of information to give you. Active listings are up 40% from January, which is typically the slowest sales month. So really, we should be seeing January's active listings be up decently high and having October's or September's lower than that, because houses sit longer in January, but we're not seeing that. There was still a squeeze to buy at the beginning of the year because the rates were so low, and now we're seeing a ton of active listings that are not selling because, again, demand is way lower than it was even in January, which is not a great sign for things to come this winter. So my takeaway from all of this is that we are headed into a recession, which we honestly already might be there. But this winter is gonna be tough. It's gonna be really tough for home buyers because a lot of them just aren't gonna buy. It's gonna be tough for a lot of consumers of other goods and services because everybody is getting really pinched on their wallets. It's gonna be tough for realtors because there's not gonna be as many houses to sell. And overall, I think the market is going to see a bit of a dip, which is gonna worry a lot of people. But I think with Pittsburgh in particular, we're not headed for a market crash. We're simply in the market for a market decrease, which is anticipated all across the board. I don't think anybody's gonna be surprised when sales are historically low in January of 2023. We're all getting prepared for this type of scenario. So my takeaway from this overall is that we are not headed for a market crash. We're headed for a market slump, but we're probably gonna be rectified as soon as interest rates go back down or shift slightly back down, even the littlest bit back down, is going to really put a fire under buyers to get moving and cinch that rate. The farther the interest rates go down, the better. The more that the demand will prop things up. So what does this mean for sellers, buyers, and investors? Well, for sellers, this means you may want to hold off on selling. It may not be a great time to sell your home, if I'm being honest. You're just not going to see the gains that you would have seen in 2021, and you might even see a little bit of a loss compared to if you were to sell in like 2024 or 2025. I would just wait a little bit more on the appreciation until things even out. What does this mean for home buyers? Again, if you don't have to buy right now, it might not be a great time to buy. But if you're a relocation client, or you absolutely must move, or you've saved up a lot of money to offset the interest rate, it may be a great time to buy right now because the competition is low and you might be able to get a really good price on a house from somebody that absolutely needs to sell. But overall, if you don't need to buy right now, maybe not the best time. And investors, should you flip houses right now? I think the answer is pretty obvious. It's not a great time to flip houses because you're not going to get paid a premium on your flip and you're going to do more work for less money. However, it's a great time for rentals right now. Rents are just as much as mortgages here in Pittsburgh, so you could take advantage of the housing market and increase your rents to match mortgage rates, which a lot of people will feel that they unfortunately have no choice but to go with. So it could be a great time to be a landlord. So if you're thinking about flipping or investing to rent, I would invest to rent. So bottom line is, buying properties is very tricky right now. I'd say the two exceptions are if you must move, or if you have enough money saved up where the interest rate doesn't matter so much and it's not gonna be a huge chunk out of your budget over time. There is no evidence to suggest that Pittsburgh is one of the cities where you're going to see extreme property devaluing and decreasing and bottom dollar sales. It's just not gonna happen because historically, our pricing, it's still very, very consistent. The median is keeping up month to month. It doesn't look like it's going anywhere. Certain people are obviously gonna see some losses, but overall, the bigger picture is that we're not headed for a complete and total market crash here in Pittsburgh, Pennsylvania. So thank you so much for watching this video. Again, if you have any questions about the real estate market, feel free to contact me. I have some contact information in the box below. If you would like to have a first-time home buyer's guide sent to you, I would be happy to supply that. Or if you are relocating to Pittsburgh and you're interested in having a relocation guide, there is a link in the box for that down below as well. So thank you so much for watching and have a great week ahead. Bye-bye.